Trade fears, President Trump planning to hit China with a 10% tariff on the remaining $300 billion worth of Chinese imports. Markets are selling off on that, extending yesterday's decline. Futures down 59 points. It follows a wild day on Wall Street yesterday, and you can see the Dow slide right as soon as the president tweeted on the tariffs, where markets basically fell out of bed, as you can see right there at about 1 o'clock. Beijing is vowing to retaliate if the U.S. does, in fact, go through with this plan. And joining us right now is Heritage Policy Analyst on Asian Economy and Technology, Riley Walters, along with Strategic Resource Group Managing Director Bert Flickinger. Great to see you, gentlemen. Thanks so much for joining us.
Great to team up.
Bert, let me kick it off with you here. Are you expecting an impact to retail? Are you expecting products to go higher in price and the consumers to take a hit?
De minimis effect on retail, Maria, next to nothing. It's only been 0.3% increase so far. Consumers will not take a hit. It will be primarily the Chinese suppliers, the distributors, and the best retailers are winning with marketing and merchandising. And the ones who are losing through poor marketing and merchandising are the ones whining and complaining. So tariffs don't go into effect until September. China's got a food crisis, a water crisis similar to 30 years ago with the Tiananmen Square massacre tragedy. And China has to worry about unrest with its own people. 200 million pigs dying, 55% of the population, water undrinkable, can't irrigate crops with it. They've got their own crisis, and they have an impaired negotiating position. They need a deal. They need a deal quickly.
Yeah, nobody's talking about that pig story because of the swine flu. They're dumping all those pigs, huge numbers of pigs, into the river. Yeah. It's disgusting. You're right. I'm glad you mentioned that. But let me ask Riley in terms of China, Riley, because they say they're going to retaliate. So what should we expect?
Well, they certainly can't tariff as many goods as we are. I mean, at this point, we're tariffing basically every single thing that we buy from China, which I disagree with our colleague here. I mean, I think we will see some costs increase over the rest of the year. But China, again, because they can't tariff as much, they will increase pressure on businesses in China through harassment, customs delays, other non-tariff measures.
Going to be a concern. Yeah, for sure. Riley, weigh in here. Final thoughts here.
I think there's going to be a lot of capacity questions about how much of manufacturing is actually moving out of China to the United States, to other countries. Certainly, scarcity is the law of economics. And so, of course, in the rest of the world,